Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now the data is in, and the data right now, you guys, is all over the place. Not only is the data all over the place, I believe the data is tainted. I can actually prove to you that data changes overnight. But not only that, you guys, they're constantly coming up with new definitions for terms all the time. So it's especially important to review data based on logic and based on experience. So today I have brought on our show to discuss with us the foreclosure data and any potential foreclosure wave coming. And what I believe is going to happen is a short sell wave from investors. But I have our great friend Steve Daria on our show. Steve, how are you?
What is up, Travis? How are you, man? Thanks for having me on.
Yes, sir. I am doing well, man. I really appreciate you coming on the show and helping us out. I know you dig deep into foreclosure data, man. So I was like, better to bring on the show. You know, I love doing collabs as well. Big shout out to you for all of your efforts in Florida, brother. I know how hard that is. I know you're out there working hard. So from me to you, mad respect. You're a good person. Thank you for being a part of our lives, man. You know, we miss you, quite frankly. Real quick, guys, I'm going to ask Steve 3 questions about foreclosures, about loan modification, and about short sales. But before I do that, do us a favor. You understand this is our personal YouTube channel. Help us push our message. Like this video, subscribe if you haven't already, and please do us a favor. Comment below. Let us know how you feel about the video. And when you're done with that, please, guys, go to my good friend Steve Daria's YouTube channel. He provides you guys with just overwhelmingly valuable data. You can see his recent videos are about the hurricane. So if you guys want to see, ground zero, the damage to the hurricane, check some of this out. But overall, one of the reasons I love Steve is his transparency and his overwhelming desire to only provide valuable content. So Steve, there's your plug, brother. And it's all true. You already know I'm a fan. You already know I'm a fan, dude. Again, man, super humbled that you're here. Let's just kick this off right now. All right, Steve. So before we really answer the questions, what I'm going to do is pull up some very important slides. Well, I think they're very important just to kind of show the viewers where we're already at with the foreclosure data and essentially why they can't just go off of the current data because it's lagging, it's far behind. So we got to really analyze this stuff with our logic. And the first page here, Steve, and I like Black Knight. Okay, they provide default information, foreclosure information. Sadly, they lag so far behind. I mean, it's like 2 months behind. But as you can see here, we're already experiencing price crashes, and it's very interesting to note that on the West Coast, pretty massive price crashes, a 13%, 7%, 5%. I found areas with well more than that. Obviously, Boise, Austin, Phoenix, Las Vegas, but this is a clear indication here and a clear map that is saying prices are going down. Obviously, the problem with that, Steve, as you know, people get trapped upside down in their house without an ability to sell or refinance because they don't have the equity to do those things. So, we're on a full-fledged price crash. Now, here's the recent foreclosure data, Steve. And just looking at the month-to-month column here, you can see delinquencies are actually down slightly. Foreclosures are sideways. Foreclosure starts are actually up 14.6%, but the data is updated. And really what I want to do is take a look at this next slide. I'm just going to tee up the viewers here so they kind of understand what we already know. But as you can see here, this bottom row that I highlighted is what's going on right now. The top is, where we were at right before the recession. So I just want to explain this column right here. Essentially, this is indicating that we have way less people in default than we did the last recession. That is a fact. And not only that, we have way less foreclosure starts. Right before the Great Recession, we had 117,000 foreclosure starts. So according to this data, we're far from where we were at in 2008. But I do find it interesting, Steve, that the serious delinquencies are actually higher, 566,000, than they were in 2007. Now, I believe a large reason these numbers are the way like this is because of loan modification. And if you look, right before the Great Recession, the average person was in their house 267 days before foreclosure process ended. Fast forward to today, people are in their house for 1,200 days before foreclosure. So obviously, you and I both know that this can happen overnight and often does. Usually when a foreclosure crisis happens, it catches people blindsided. So it's not in the data until the problem already exists. So, my first question for you, Steve, and I may have teed you up a little bit too much there. I'm sorry for that. I just ramble. I'm sorry. I'm a rambler. But, can you explain, why this data isn't telling us the true story? And can you explain what you think is going to happen moving forward with foreclosures?
Yeah, man. And as always, man, I appreciate you always dissecting the pertinent data that is useful and imperative to make sound
Yeah.
decisions, especially if you're investing or buying real estate to live in. I think the biggest thing is the banks learned a valuable lesson in the
Mm-hmm.
last real estate recession. And the thing that I think that they learned was to not repeat what they went through, because it was a mess. It was a disaster. Going through helping people avoid foreclosure, doing short sales and everything else, doing loan modifications was a disaster. So I think that unfortunately what they're doing is they're just backlogging the inevitable. You can't stop people from not paying their mortgage, and that's just going to build up. And the more it builds up, the worse things are going to get. And it's very comparable to our government and what they do. They kick the can down the road, and what
Yes.
happens? It just delays things, and it makes that wave bigger and bigger and bigger. But eventually, that thing's got to crash down, and when it does, it's going to be devastating. So instead of just letting things have the natural recourse, they're just manipulating everything once again, in my opinion, and doing a modification for somebody who is struggling to pay their mortgage right now.
Yeah.
It's not going to work no matter how you twist it. So are you just allowing that person to stay in that property longer? And what's the advantage of doing that? Who knows how it's going to end, but I don't see it being pretty.
So, I mean, essentially what you're saying is, the data is like this because, quite frankly, the lenders, as they should, because we bailed them out, right? A lot of people forget 09 or, we bailed these people out. So
Yep.
they should do everything they can, in my opinion, to try to keep people in the house, but they've learned their lessons. Obviously, the loan modifications are keeping a lot of people in this group of serious delinquency status, right? And I totally agree with you, Steve. Like, some people that are not going to catch up. Right, that's a fact. It's maybe they lost their job, medical emergency, whatever the tragedy is. Some people can't do it, and that is the reality with or without loan modification. But segue, sir, into our next question. And I have my own feelings, and I'm going to try to keep it out, brother, because I want this to be about you. And you know how I get so passionate and so emotional, and people call me diva, all the time. Diva, you too, so emotional. I'm just like, whatever, dude. The fact that I've helped one person avoid potential financial catastrophe, that's good enough for me. The haters can kick rocks. It is what it is. I'm sorry. I'm just on one this morning. So, talk if you can, brother, and dig deep if you need to, but talk overall. What are your thoughts on loan modification? Do you think it's more, like you said, kicking the can down the curb, or do you think society needs this? Do you think it helps society? Do you think it helps not all people will be able to catch up, but some people with a little helping hand, right, can get up, right? So what's the percentage of that? I don't know, but share your thoughts on whether, a little bit more about loan modification and whether or not you think it's effective. Oh, and tell people what a loan modification is. I realize that essentially it's in lieu of foreclosure. The lender allows you to redo the terms on your mortgage to catch you up. So that's what
Yeah.
a loan. You're modifying the terms. You're generally in a 40-year. They're making the payment cheaper. So can you share what you think about that?
And in most cases, you're going back through the whole pre-qualification process as if you were getting a new loan. So I think there's absolutely a place for it. People do fall in hard times, and banks should work with people if they have the means to pay that mortgage. If they don't have the means to pay the mortgage, then help them transition into a deed in lieu of foreclosure, or better yet, a short sale. But the banks, I believe, once again put us into a situation of providing loans to people, and people are overpaying. They're paying above appraised value. They're buying real estate with very little money down. The artificially low interest rates caused a lot of this too. So, I mean, and the amount of money that was pumped into the system.
Yeah.
So it was, our lending institutions and our government that kind of got us in this hole to begin with. But unfortunately, if somebody's buying real estate, and I learned in the past, I had to short sale my property back in the last housing recession. And I even, I took an 80-20 loan on that property, and I didn't even bother doing a loan modification because I was just like, this is it. It was a ridiculous decision to make to even get into that loan. And I think that a lot of people bought real estate, a lot of first-time home buyers, and they didn't really know what they were getting into. And they're, buying real estate with no inspections and everything else. So anyway, I think that unfortunately, I think we're going to see a lot more job losses. I mean, Powell's coming out and saying it, he's trying to correct the market, right? So that's going to equate to a lot of job losses. And if you don't have a job, how are you going to pay your mortgage? So we could enter into a deflationary period. And if that happens, there's going to be a lot of job losses. And people, I had a conversation, I forget who it was with, but it was about actually, years back, this before I got into real estate and everything else, you were like fighting to get a job. And in entry level jobs, they just weren't
entry
around.
Level.
Yeah.
Nope. I remember, bro.
And because of what happened over the last 2 years, there's an abundance amount of jobs. Yeah. Why? Yeah. Because the government did what they did. And so I think we're going to see mass job losses. And I just think that people are not going to be able to modify. And then the lending institutions are going to have to make a decision. Do we proceed to foreclosure, or do we just keep letting people live for free and do nothing? Yeah. And I don't think that you can only do that for so long.
Yeah, I mean, the lenders are in business to make money off of their money. They're not in business to manage properties. But you picked up on some really good points that I think the viewers need to understand. You can't just do a loan modification. You have to qualify, and normally you have to not necessarily your credit, but your income. You have to demonstrate to the lender that by doing a loan modification, it's worth their time because you can get out of the hole. So, that's a good point. And another point, Steve, that you kind of hit me with, that came into my mind is normally you have to be late. So you can't be like current and say, hey, I want to, I'm struggling right now. Let me call my lender and see if I could do a loan mod. A lot of times they require you be a certain amount of days late. And the problem with that is, and a lot of people don't realize, your credit's done. Your credit's done. If you can't get qualified for that loan mod, and I hate to say it, Steve, but more than likely you're not going to be able to buy a house for quite some time. And that is why I personally think, like, give these guys a chance. Give them a chance. If they can get out from under that rock, give it to them. It's a home. Let them have that. But the reality is, brother, like you just said, like there's just going to be some people that cannot afford it no matter what. They may have to move back in with their parents or family. But it is helping some people, man. But
real quick, man.
And
let me touch on this real quick. If anybody's listening and they're in this kind of situation and you are current on your mortgage, you probably got a really good interest rate on that mortgage, probably a good 30-year fix or whatever the case is. Consider right now, I know you're going to have to move out of the home, but it's probably inevitable anyway, but it could change your life. Consider renting that property out because you most likely could cash flow it. Hopefully you can cash flow it. And if that's the case, rent it out and take off, become a landlord. And who knows, that could be a future asset for you.
That's a solid point. I mean, instead of destroying your credit and, being stuck like I was for 9 years, try to rent it out, get some cash flow on there. Or another option is if you still have equity, sell it and sell it now. Because the reality is the data is showing us right now that the longer people wait to sell, the more difficult it's going to be. We have a massive surge of new construction. Everyone's dropping their prices. There's still flippers that are trapped in the market right now. I found 3 of them in a 100-yard radius on my MLS. 3 flippers, vacant properties, shed the prices on their homes. And not only that, new builders. So all these new builders that are doing these price cuts, Steve, they're screwing all of the current owners. All of
Yep.
the, I'm not current, but all of the recent, possibly current, but all of the recent owners, they're trapped in their house. It's a huge problem. Last question, brother. We touched on loan modification. There's pros and cons of that. Now, can you touch on, as a result of this loan modification and as a result of the massive amount of investor share in our housing market, do you think it's possible that instead of a foreclosure surge comparable to 2008, do you think it's possible that, and again, we have the loan modifications, we have certain safeguards in place, that instead of that foreclosure, we're going to have a surge of short sales? Because you remember the last recession, what were realtors selling, right? They were selling foreclosures and short sales. Every realtor was selling foreclosures and short sales. So tell me your thoughts on short sales. And Steve, and touch on whether or not you think those short sales will be coming from owner occupied or from a lot of these investors, these flip investors that are, quite frankly, they're trapped and now upside down and they can't do nothing. Can you and maybe, some of these investors want to short sell so they don't have to lose as much money on the house, right? So can you share your opinion on that?
Yeah, for sure. I mean, in the last crash, we did several hundreds of short sales listed and help people avoid foreclosure. I even created courses for it because I figured that we're going to see that again, which is one of the reasons why I did that. Absolutely. Minority Mindset, Jaspreet, he had on YouTube, he had one of the polls, and the polls, it was basically like the first property that they've ever bought. And it was literally like 80% were like within the last 5 years.
Okay.
And I found that very interesting based on that poll, because you had if 80% in the last 5 years are the only ones that, that's their experience in real estate, and they didn't really feel a crash. All they have felt is a appreciating real estate market, and then basically a huge boom. I think it's going to be a rude awakening for a lot of people, unfortunately. So, but I think that we're going to see we're probably going to see a lot of investors get stuck, and whether they have hard money or traditional financing, we're going to see them get stuck, and it'll just depend on the lending institutions too, how streamlined they're going to have for their short sale processes.
Yeah, I'm on good points, man. I'm on Minority Mindsets channel. How old was the poll? I was trying to pull this poll up here. Was it pretty old poll?
I think it was pretty recently.
Oh, he does a lot of stuff. I love this guy, Minority Mindset. I've listened to a lot of his stuff.
I'm pretty sure it was him.
Well, I mean, our viewers can go there. It's no big deal, man. I'm telling people, Steve, and I've seen it, yourself. How many people call us crazy? You just look back 8 months ago. People were like, "You guys are just doom and gloomers." What interest do I have in telling someone not to buy? I'm in the industry. When people buy, I make a lot more money. So, do you remember him saying there's not going to be a crash that they're going to go up in value because of supply? Do you remember all that stuff, man?
And I did a video on the builders. I said, get ready for the builders to do a handful of things. They're going to provide incentives. They're going to provide bigger commissions to real estate agents, and they're going to start reducing price. And I got, a bunch of bullshit comments.
I know. And what's happening right now? Like, where are those people at? I want a sorry. Where's my sorry at? So
but we're trying to do our best to forecast what is coming. Yeah. And we're not talking about what's going to happen exactly tomorrow, especially in real estate. It takes time. It's not like the stock market where all of a sudden a stock's down 20%. The real estate market takes time, and it goes back to your point too on all that info. The info that we're receiving, a lot of it's lagging data, and if you're just paying attention to the real current market in your micro market, it tells a different story.
Yeah. And not only that, dude, I mean, I'm pulling data from Fred Economic Data. I'm looking at household savings rates. I mean, the household savings rates are plummeted. People don't have money right now. I mean, it's under pre-pandemic level. People are broke. It's already showing that in Fred Economic Data. People are drowning in debt. I mean, it's getting compoundingly worse, man. But the thing is like you just said, we can't just look at the recent foreclosure data because it doesn't paint the reality. It's very, very lagging data. It's very, very lagging data. And what's really important is like, understanding unaffordability, understanding people are struggling, and understanding the numbers may not reflect it because of loan mod, but there's a point where it's going to come crashing down in tip. That's what happened last time, usually when there's foreclosure waves. So really what we're trying to do here, and correct me if I'm wrong, man, we're trying to warn people so they're prepared, right? So instead of going out to a dinner and a movie tonight, maybe just go out to Blockbuster. I'm just kidding. Do you remember Blockbuster? Bro, I love Do you remember we could get 2 popcorns and 3 movies for $5 before they went out of business? I was like, Mom, Dad, take me to Blockbuster. They're having their sale. But I'm just saying, man, like people spend so much money, and that is why the Fed keeps destroying us, because people keep spending. And I believe a lot of that spending is because of not necessity, it's because of habit. And unfortunately, what I've noticed, Steve, is a lot of people today are in the habit of being in debt, being in credit card debt. The problem is when you're in debt with a home and you don't pay, you're done. Like you're foreclosure. You can even get a what is it called? A deficiency notice. I got over $100,000 deficiency notice, bro. So not only do I have that foreclosure, they're like, we're gonna also get you on this. So I had an IRS lien, following me around, and all because it stemmed from me buying an overvalued property, recession, lost job, trapped.
That's
so
why.
I don't want that to happen.
That's
Man.
why. That's why I appreciate your channel, man. You're trying to help people be preventative, not get into that situation, and then to compound it, trying to help people see what the future is. Even right now in Southwest Florida, we're looking around real estate and we're like, it's still crazy high, but I'm just
it is.
Be patient.
Right.
And I think some of the biggest opportunities are ahead. And I've seen this show before, and I'm ready for it, man.
Me too, brother. And and I hope that's what people are getting, right? And here's the thing I really want to dig home. You, especially for first-time home buyers, things are getting more unaffordable and things are getting more difficult to purchase. So it's even more important that you decide right now to step up and stay ahead of it. Do some sacrifices. Learn how to spend your money, budget, save your money, your cash, get overtime, right? It's never been more important to step up right now because so many people can no longer afford to buy. Those of us like me, Steve, that can still afford to buy, we're the unicorns. We're the leprechauns, unless you don't like leprechauns. It's just something else. Maybe the Marshmallow Man from Ghostbusters, whatever it is. The Gremlins, what's his name in the Gremlins? The cool guy? Gizzard? No, not Gidget. No, not Gidget. Gadget? I'm sorry, bro. Why are we... See how I'm all over the place?
Leave it in the comment section below.
I think it's Gidget. Oh my gosh, dude. But anyway, Steve, I really appreciate you, man. I know you got your hands full with the recovery efforts. Again, guys, go to his channel, see what's going on in Florida with the hurricane. His recent videos have links to donations. If you guys want to help Steve, if you want to donate to the recovery. Yeah, man. Because the reality is there's going to be some foreclosures as a result of the hurricane. Obviously, some people didn't have the flood insurance because they weren't in floodplains. There's new floodplains. That's a whole nother issue. But let's just keep warning people, Steve. Keep transparent, keep accountable, man. And I just really appreciate you being here. Before I go, is there anything you want to say?
No, man. Once again, I appreciate you having me on the show, and hopefully we can do more of this. And I'm hoping to have some more time. But again, like we said, man, we're out here in a little bit to go help somebody else out, and things will get somewhat back to normal here. But appreciate everything you're doing, man.
Yeah, man. I mean, the boys and I, we miss you, dude. Obviously, we're part of a group, and we miss you, man. So hurry up and get better, Steve. We miss you, brother. So sit tight with me, man. I'm going to do my outro right now. All right, brother?
See you, man.
All right. So you guys, do me a favor, show Steve some love. He's one of the good guys. He's one of the honest guys. And, go over to his channel, check out some of his material. Now, other than that, you guys, we really hope you guys got some value, perspective, and insights from this video. And if you're out there investing in real estate, I wish you luck, and I hope you win.